we look at basically the only Mag 7 company now in the green for this year is Meta. All of the rest are in the red. Were you expecting this going into 2025?
I think one of our themes has been that of rotation and broadening, and that's playing out at the sectorial level, investment style, and also regional, geographic. Many people probably are surprised by the market's resilience. If you told an investor 6 months ago that 6 of the 7 magnificent names would be lagging the market down the group 5% for the year, most people would have thought the market would be lower, which is not. And I think that speaks to the still supportive backdrop that we have.
Angelo, what does this tell us about how investors are feeling, or perhaps some of the reasoning behind it? Is this because of the uncertainty that Trump has injected into tech markets more so as of late, or are investors growing more discerning about tech's growth prospects?
Yeah, the market has had to navigate a lot of news, thinking about DeepSeek, thinking about all the tariff announcements and uncertainty, and the last hotter-than-expected CPI print. All that has been weighing on sentiment, and right now we are navigating a growth scare. It's not the first, it will not be the last. But at the same time, looking at the last 3 years, it's been a pattern that we do see some seasonality, negative seasonality in the first quarter of the year. Part of that probably related to weather, some snowstorms that are dragging down consumer spending. But the broader trend remains that where corporate profits are accelerating, so they don't have a need for layoffs to protect profit margins. And we have a Federal Reserve that is not looking to go back into tightening mode. So all that to us remains supportive, but at the near term, we're going to experience probably a type of soft patch for the economy in the first quarter.
And I hate to say this sort of healthy flush out, or what people like to talk about it, but many are thinking, look, this is froth that needs to come out. There were so-called tourist investors that had come in and not assessed really the geopolitical element of these names. Look, Nvidia's traded lower than this year, but are we going to start to see dip buying, do you think?
Yeah, I think that's exactly right. We have seen some froth, and we are seeing some froth come out of the market, and we all know that sentiment is a contrarian indicator. So that sets up well for the second potentially half of the year, where for a long-term investor standpoint, these pullbacks can be opportunities to really deploy capital, fresh capital, diversify portfolios. We think that broadening and rotation theme has legs to it. And for those that are worried about tariffs and the impact of policies, we have domestic cyclical companies and sectors that can benefit from the pro-growth policies that are likely coming down the road. So far, we're getting the vegetables before the cake. In the first Trump administration, we got the cake first with tax cuts and then the vegetables. So we have to navigate through this bumpier path earlier in the year.
But everyone ate the Tesla cake the minute that basically Trump was announced as the winner in Elon's relationship. But how idiosyncratic, how focused on individual names do you have to get and actually read through what if fundamental changes in the views on certain companies, like European sales for Tesla, which we'll dig into later in the show?
Yeah, I think, certainly the concentration is an issue for investors and people that manage money. But at the same time, we know that the 493 earnings are accelerating, actually are the strongest in 3 years. So there is a lot more beyond these 7 names. Yes, they are important, but they're becoming less important than they were in the past. And I think diversification is going to be a key theme for investors to pay attention to.